start your way. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what happened across the globe on Friday. The US markets ended down by close to 0.5% to 1%. The Nasdaq was down over 1% in trade, while there was selling pressure even that was seen as far as the European markets are concerned. The Nikkei is shut in trade today, but the cues that we're getting in from the other Asian markets are not the most encouraging. Hong Kong is flat in trade and China is open today after a week's gap, so that is trading down in trade. What we are seeing as far as the SGX Nifty is concerned, that is also indicating a downtick of 20 points. So we will probably on the Nifty open below the 10,300 mark in trade, which is indicating severe weakness. Even the ADRs ended with a negative bias. Vedanta was down 4%, Tata Motors, ICICI, HDFC Bank, all of them ending with a negative bias. As far as the only gainer was concerned, and that was Infosys, which managed to move up 2%, given the fact that even in India, most of the IT counters had managed to stage a little bit of comeback. As far as the Nifty is concerned, the Nifty was down almost 3% in trade. There was more selling that was seen on the mid cap and the small cap end of the market. The Nifty Bank was down over 1.5%, and majority of the selling came in the second half of trade post the RBI policy. The Nifty PSU banking index was down almost 4.5% in trade. What managed to buck the trend was the IT index, which was up almost 1% in trade. But look at the cuts that have come in the oil companies, especially because of the oil marketing companies. The Nifty energy index was down 8%. The metal index gave up most of the gain. It was down almost 4% in trade. As far as the week is concerned, the Nifty itself in a matter of 4 days cracked almost 6%. But look at the cuts in the energy space, almost 15%. Auto, because of weak auto sales numbers and weak Qs that are coming in, was down 7%. And the FMCG index was down 6% this week itself. As far as the flows are concerned, FIs were sellers to the tune of 3,400 crores, DIs were buyers to the tune of almost 1,900 crores in the cash market, but nevertheless it's a market that's only getting in domestic money. FIs have been sellers here. As far as the Nifty is concerned, the Nifty was down 282 points. Look at the cuts. Reliance, HDFC, ITC, ONGC, Reliance having a cut of almost 65 points on the Nifty itself. What managed to help the Nifty a little bit was the IT stocks and the private sector banks. If you're looking at the Nifty futures, there were fresh short positions that were seen. On the bank Nifty positions, there were long unwinding that was seen. Open interest was down 8% on the Nifty bank. As far as positions are concerned, where are we seeing the maximum open interest at this point of time? It's at the 10,500, but we are at 10,000. We are below 10,300. So there will be selling pressure. Probably that will come in trade. Even if you look at what happened on Friday, call writers were much more aggressive. You can see the green lines on top, which indicates that call writers are aggressive, and the red lines on down indicate that put writers are selling off their positions because they are making losses. The Nifty PCR, the bank Nifty PCR, both of them came down in trade. No stocks in the F&O band, but there are 4 stocks I want to highlight. Oil marketing companies, the weakness and the trend continues. BPCL still trades above book. Open interest built up of 20% on the short side. You have counters like Balkrishna Industries, which saw fresh shorts. Open interest build up was 7% on the counter, and the counter saw fresh shorts. Bajaj Finance again has corrected 33% from the recent highs. It went below the 2,000 mark in trade. Open interest build up of 6% on the short side. And the final stock I want to talk about is Titan. Managed to hold on its own post the operational update that came in. Open interest build up of 2%. Came off the day's high, but nevertheless valuation concern still probably remains for Titan. But these are all the domestic cues that you're looking at. Let's go across to Paul Allen for all the top international headlines.
Brazilian media are calling a runoff in the presidential election after right-winger Jair Bolsonaro won the first round but failed to gain outright victory. The runoff is expected on October the 28th. Brazilian assets have surged with his rise as investors ignore his authoritarian streak and bet on his pro-market stance. The election was dominated by recession and accusations of corruption. The number of people killed in the Sulawesi earthquake has risen to 1,763, with more than 5,000 still unaccounted for. Aid continues to arrive as the government said it's considering creating mass graves because of the number of victims. The force of the quake liquefied the soil in many areas, swallowing whole villages and making it unsafe for heavy diggers to operate. UK services firms are doing the least hiring in at least 25 years as confidence plummets ahead of Brexit. A quarterly survey by the Chambers of Commerce says the percentage of firms attempting to recruit staff is at its lowest level since the early 1990s, and even those looking to hire are finding it hard to do so. Export sales and orders are also at their lowest levels since the second quarter of 2016. Tokyo's famous Tsukiji fish market has closed after 8 decades, with shop owners and workers questioning the safety of its replacement. The market will reopen on Thursday at Toyosu, a new $5 billion site on a former gas plant. The move was delayed by years due to concerns over contamination. Tsukiji had more than 500 wholesalers employing several thousand staff, and about 40,000 people visited each day. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
The last time, 3 months or so ago, that they met, and Pompeo did not even meet Kim Jong-un in that meeting. He stayed one day, and as soon as he left, the state media in North Korea put out a note saying, you know, the White House had gangster-style tactics. So there was some bad blood there after that fairly momentous summit in June between Kim and Trump. But this time, even Kim said it was a productive talk. It was wonderful talks. He expressed gratitude to Donald Trump for his sincere efforts. Even Donald Trump tweeted, progress was made on the agreements made in Singapore. I look forward to seeing Kim Jong-un again in the near future.
There seems to be a bit more meat on things, but we're just going to come to that in a second, because we've just got some headlines coming through. The South Koreans are saying that Kim is going to visit Russia, and Xi will visit North Korea as well. So
there'll be some other summits. Yeah, Xi will visit North Korea. That's been in the works for quite some time, and Kim to visit Russia. So we're getting some of the players of the former six-party talks getting back together.
Even North Korea and Japan summit, South Korea is saying is pretty possible as well. So some interesting lines here.
Yeah, these were made by Moon Jae-in in his cabinet meeting today. But, you know, the question is, would a second summit between Trump and Kim go further than what we saw in Singapore, which did not necessarily net any concrete pledges from the North Koreans? The United States still wants CVID, complete, verifiable, irreversible denuclearization.
Yep. Pompeo on the way to Beijing. That could be.
That's probably the most important leg of the entire trip. Okay, he's already made 4 trips to North Korea. There have been no concrete measures announced by the North Koreans, other than what the Donga Ilbo newspaper has been saying, that he's made pledges to open up various sites to inspectors. He's also saying he's willing to scrap ICBMs in exchange for a peace deal. But the real broker in all of this would likely be Beijing, at a time, of course, when there's increased tension, to put it lightly, between China and the United States, more tension on the military front, on the trade front. And will Pompeo get receptive ears in Beijing to push North Korea to come through on the pledges they made on denuclearization? Against
this backdrop of a trade war and some nastiness going on between DC and Beijing itself. Thank you.
So that's probably the most important trip.
Well, while most economists have expressed a surprise at RBI's whole decision in the MPC meeting on Friday, they continue to expect further policy rate hikes in the coming quarters. Morgan Stanley has said that the RBI's decision to keep the rates unchanged could partly be in response to manage the liquidity situation. They view this only as a delay of the monetary policy tightening, since the external environment remains challenging. They've said that given that reason, the attracting marginal capital flows will now require an increase in the real rates, especially in an environment where India is running a sizable current account deficit. So they see another 25 to 50 basis points of rate hikes in FY19. Credit Suisse has said that they remain more pessimistic about India's inflation outlook. They continue to expect further policy rate hikes in the coming quarters. Nevertheless, they've ruled out a December hike, calling it too early. They've said that oil prices and credit growth are likely to be the two swing factors for RBI. Any continued rise in oil prices, they say, might pull hikes forward to December. And in contrast, if the recent liquidity stress in the NBFC sector were to accelerate the slowdown in credit growth, then it might argue against further hikes. Goldman Sachs expects 100 basis points hike by the RBI in 2019. JP Morgan has said that they continue to believe that inflation in the first half of 2019 will average 5% or above, and hence that will necessitate a more monetary tightening. They have penciled in 50 basis points of tightening across December and February review. So more rate hikes coming is the collective call coming in from brokerages.
MPC's mandate is only inflation, and Governor Patel was the chairman of the committee which pretty much drafted the mandate for that, and there were views that they would only think of the mandate, so there should be other agencies looking at other aspects of the economy, and that the MPC, given its legislative mandate, should only be looking at inflation. And this is what was explained also in the press conference after that. And if you look at it through that prism, I think what they did was absolutely right.
The RBI is more focused on protecting the financial system and on making sure the NBFCs and the CP market has enough liquidity than obsessing about inflation or the rupee. I think it's the right thing to do. The RBI has got its priorities right, but yes, it does put the rupee on an even weaker footing. And it does mean that the currency has got further to go in the coming months, even if oil stays at the current level.
We were anticipating that there could be an upside risk to the 5% inflation forecast that RBI had put out for the first quarter of the next fiscal year. We had seen a 25 basis point upside risk. Clearly, that is not to be. The stance has been changed to calibrated tightening. I think October and November, as I was saying, were the most difficult months to come by, and that's the time a lot of global issues will play out in terms of midterm elections in the US. You will have OPEC meeting in November. But having said, a 25 basis point rate hike today perhaps could have calmed the markets a little bit. Rupee would not have been in a hurry to breach the 74.
The fact that they didn't raise the policy rate is in line with their own current inflation projections having kind of come down, which probably the only reason I can think of is that it's too early to kind of judge the rupee and the behavior of the rupee over the next 6 months, and therefore the impact on inflation that may have. Within that, I think it's consistent.
In my view, clearly this was not supportive of keeping rupee anchored, and the domestic rates market also in line with the inflation outlook. So clearly, the central bank feels that inflation upside risks do not exist presently, and hence they are willing to wait it out.
Shifting focus to currency and bond markets, the Indian rupee on Friday weakened past the crucial 74 per dollar mark and ended lower for the third straight session after RBI left the key interest rates unchanged. The currency markets had in fact priced in a 25 basis point rate hike, believing that this move will likely support the rupee's fall. And it was also in line with the US Fed's tightening view. However, when RBI left the key interest rates unchanged, the currency markets clearly did not like this move, and we have seen rupee weakening to 74.23 levels per dollar on Friday before ending 0.3% lower at 73.77 levels a dollar. Bond markets, on the contrary, rallied after the announcement, as we have seen the yields falling nearly 13 basis points to end at 8.02%. Remember, the home currency has depreciated for the sixth straight week. If you see its weekly performance, last week it was down about 1.8% versus the dollar. On the global front, dollar index now trades steady around the 95.70 mark after falling for nearly two trading sessions. The index was largely weighed by lower than expected non-farm payrolls data that came in on Friday evening. That apart, if you see euro and pound, both the currencies ended higher versus the dollar on Friday. However, now trades little unchanged in the early Asian hours. And lastly, if you see dollar rupee, now it is trading at 73.85 levels versus the dollar in the non-deliverable forward markets, which indicates a flat to weak opening for Indian rupee in today's trade.
Well, a bunch of news that we're tracking this morning. To begin with SOBA updates, where the Q2 sales numbers have come in. The sales for volume has risen as much as 19% to 10.3 lakh square feet for the company on year-on-year basis. And the total value, that's an uptick of nearly 10% for SOBA. Himachal Futuristic Communication, that's another stock on the radar, where the company has received an advance order to the tune of around 900 crore from TCIL. Also, we are tracking Goa Carbon, where the company has reported the production as well as the sales number for the month of September, which is a downtick of nearly 9 and 36%, well reflected in terms of the earnings of the company, which was reported back on Friday, and the EBITDA there reflected a 95% downtick year-on-year basis. Also, we're tracking in Gravita India, where the company's 300 crore order worth from Singapore-based KN Resources has been terminated due to financial and management issues at the party end. Now, this order was around to the tune of 18,000 odd billion supply, out of which part of it was already been supplied to the customer, and remaining 14,000 was to be redirected to other markets and other customers. Now, given that the order stands terminated, aluminium stocks again are expected to be in focus, given that the LME aluminium prices have dropped by as much as 2.4% to 2,080 per ton. That's on back of the development that Norsk Hydro is ready to restart its world's biggest alumina refinery capacity back at 50% capacity utilization level.
Aavas financiers will list on the exchanges here today. They had set the issue price at the upper price band of 821 per share. It was a total issue size was for about 1734 crores, out of which fresh issue was 400 crores and 1334 crores was offer for sale. Now, if you look at the subscription numbers, overall it was subscribed 0.97 times. So the issue somewhat just managed to sail through, and that was largely led by institutional investors, where we saw some oversubscription. Whereas the HNI and retail portions remain undersubscribed at just 0.25%. Given these kind of weak subscription numbers and the risk averseness to NBFCs, the issue is expected to list at a discount in trade today. So we have considered two scenarios. One is at a 5% discount and one is as a possible listing of 10% discount, though this could be a much steeper discount as well, given the current market conditions. But at a 5% discount, the implied market cap would be about 6,100 crores and the implied price to book multiple would be 3.9 times. At a 10% discount, the implied market cap would be 5,800 crores and the price to book at 3.7 times. How does this then compare to some of its peers? Well, if you assume listing at the issue price of 821, the price to book multiple works out to 4.1 time, and that means that it would be a lot more expensive than its peers like Repco Home and PNB Housing Finance. Canfin Homes and Guru Finance trade at much higher price to book value ratios, but again, look at the kind of ROEs that they have in excess of 20-25%, whereas Aavas Financiers has a lowest ROE at 11.2% amongst its peers. Now, just a quick recap about what the company does. It's a retail affordable housing finance company which started in 2012. It was a subsidiary of AU Small Finance Bank earlier and is now promoted by private equity players. They largely lend to the low ticket, high yield segment. They're targeting low income, rural and semi-urban customers who are largely self-employed versus or as opposed to salaried, and they have a presence in 8 states. But if you look at the geographic breakup of the AUM, just one state, which is Rajasthan, which is the blue color, contributed to about 47% of the total AUM in FY18, and not just that, the top 4 states contributed to as much as 92% of the AUM, exposing the company to sizable geographical risk. But if you look at the financial performance, they've seen a stellar growth. If you look at the compounded annual growth rate over the FY14 to FY18 period, the loan book has grown at 58% and the net profit at 71%. The gross NPA ratio is pretty healthy at 0.34%, and the company enjoys net interest margins in excess of 7%. However, the capital adequacy ratio at 61.5% is extremely high, and that combined with the lower leverage has led to suboptimal ROEs at about 11.2%, and that is also something that analysts had spoken about when the IPO had opened, raising some concerns on the expensive valuations. So today likely to list at a discount.
The terms of legislative assemblies of Chhattisgarh, Madhya Pradesh, Rajasthan and Mizoram are due to expire on Chhattisgarh, 5th January 2019. Number of seats is 90. Okay. Chhattisgarh, the term is expiring on 5th of January 2019 and number of seats there is 90. Madhya Pradesh, term is expiring on 7th January 2019 and the number of seats is 230. Rajasthan tenure is coming to an end on 20th January 2019 and number of seats is 200. Mizoram, the term is coming to an end on 15th December 2018 and number of seats is 40. And all these 4 states have been going to polls simultaneously, 15th December.
Let's also get your check on the top 3 stocks to watch based on the delivery buying and selling as of Friday. The first stock to watch out for would be SBI, which was down about 5% in trade and saw delivery selling in excess of 350 crores. The delivery volume more than doubled for itself as the total volume surged just about 40% when compared to its 5-day average. Second stock, once again from the banking space, Bank of Baroda. Now that was down about 4% in trade and saw delivery selling of exactly 100 crores. The delivery volume surged about 87% as the total volume surged just about a quarter when compared to its 5-day average. Last and final stock, ITC, which was down about 4% in trade and saw delivery selling of 333 crores. The delivery volume surged more than 80% as the total volume surged just about a third when compared to its 5-day average.
Well, there's several stories like that one on the website, and of course you'll find all the live market action right here on Bloomberg Quint Live on all the social media platforms and also on the website. So do check it out. Here are a couple of stories that you'll find if you log on right now. Finance Minister Arun Jaitley said a parliament-approved legislation can restore mandatory linking of the Aadhaar with mobile phones and bank accounts, but he did not say if the government will bring a new law to do so. Oil in London extended losses below $84 a barrel after Saudi Arabia said it can tap its spare production capacity immediately to offset any declines in Iranian crude exports due to American sanctions. That's all you need to know going into trade today. Up next is the Indian Open, so do stay tuned. This is Bloomberg Quint.